Question number 1. What is the most accurate definition of the term, quote unquote, market value in real estate? Letter A. The value a property is assessed at for tax purposes. Letter B. How much a property is likely to sell for in a competitive and open market under normal circumstances. Letter C. How much a property is likely to sell for off-market to a cash investor. Letter D. The property's last sales price as long as it was within the last 5 years. Question number 1. What is the most accurate definition of the term market value in real estate? And the answer is letter B. How much a property is likely to sell for in a competitive and open market under normal circumstances. Okay, simply put, we definitely want to know the definition of market value. That's definitely something that you're going to see on examinations. So I would just be very aware of what is market value, and then what is market value compared to what is market price and what is cost. All of these items are very popular on exams. So you want to know them. So again, market value here is what is the likely sales price during an open market normal circumstance condition. Not an all cash sale, and definitely not D here within the last 5 years. We know that that's definitely skewed. A market value is a property assessed for tax purposes. Letter A is not accurate. Many times we use mass appraisal techniques and actually augment valuation, so it's not reflective of the actual market, but some derivative number below or above based off of these mass appraisal techniques. So letter A is also out of the question. Question number 2. Property owners whose land abuts a flowing river or stream have the right to make reasonable use of the waterway according to letter A, riparian rights. Letter B, the bundle of rights. Letter C, the Clean Water Act. Letter D, littoral rights. Question number 2, a property owner whose land abuts a flowing river or stream have the right to make reasonable use of the waterway according to and the answer is letter A, riparian rights. Okay, a few things here you want to remember. Riparian rights are rivers and streams. Riparian rights deal with smaller flowing bodies of water. And then littoral rights deal with larger standing bodies of water that are tidal many times. Oceans, think of L for Great Lakes or O for oceans in littoral. The Clean Water Act has nothing to do about reasonable use of the waterway. It deals with pollution, and it deals with proximity to construction next to waterways and such. And then the bundle of rights is more of this overarching equitable title concept. But here we're talking about water rights, and this is classic. Water rights are definitely popular when it comes to practice exam questions. So look out for them. Know the definition riparian, know the definition littoral, as those two are usually on there. The bundle of rights we talk about usually in the real property and law sections of books. And then the Clean Water Act you'll see when it's more relevant to the state specific as opposed to the federal level Clean Water Acts. Question number 3. If equal monthly payments are made on a fixed rate 30-year mortgage loan, the structure of each payment will be distributed so that letter A, the amount paid towards the principal balance will increase each month. Letter B, the amount paid towards the interest will increase each month. Letter C, the amount the mortgage balance will decrease each month. Letter D is both A and C. Question number 3, if equal monthly payments are made on a fixed rate 30-year mortgage loan, the structure of each payment will be distributed so that and the answer is letter D, A and C. Sorry about that. Letter D, A and C. Now, so what's basically happening here is this is what sort of a fully amortizing loan does, is that we're making payments towards principal and interest, and over time, as we move forward in the payments of the loan, the structure, that was the key phrase here, the structure of each payment, which is a fixed payment, But the percentages and the allocation towards interest and principal will shift over time, okay? So that's the structure of each payment. Now, what that means is the amount paid towards the principal balance increases. So over time of a 30-year mortgage, we pay more and more of that payment goes towards principal or the original amount that we borrowed, and less goes towards interest. So B and A are sort of contradicting each other. Then the amount the mortgage balance will ultimately decrease over the time. So we're paying less and less. We're paying off the balances, and the amount is lower and lower over time. So A and C here are the correct answers, and therefore D, both A and C, was ultimately the correct answer. Question number 4. Property taxes are, quote unquote, ad valorem taxes and are based on the property's, letter A, market value, which is determined by a tax assessor. Letter B, assessed value, which is determined by a real estate broker. Letter C, last sold price, which is determined by a real estate broker. Letter D, assessed value, which is determined by a tax assessor. Question number 4, property taxes are ad valorem taxes and are based on the properties. And the answer is letter D, assessed value, which is determined by tax assessors. Okay, so here we just need to know what the definition of ad valorem taxes is. And ad valorem is translated as Latin for according to value. That's what it means. So ad valorem taxes, real estate property taxes, are ad valorem, which means according to value, the assessed value of which is determined by the tax assessor. So ad valorem is not the market value, which is determined by the tax assessor. It's not the assessed value, which is determined by a real estate broker. Real estate brokers don't assess taxes. The last sold price, which is determined by a real estate broker, letter C, no, absolutely not. So B and C definitively are gone. A could be a confusing one for some students, but it's not the market value. We're determining the assessed value. So there's a difference between assessed value and market value, and the assessed value is what ad valorem taxes is. Question number 5. Which statement most accurately demonstrates the difference between condominium owners and cooperative owners? Letter A, condominium owners own their units plus a share of the common area, while cooperative owners only own their individual units but have no ownership interest in the common areas. Letter B, condominium owners own individual units while cooperative owners do not own their units. They own shares in a corporation that owns the building. Letter C, condominium owners own shares in a corporation that owns the building while cooperative owners own their individual units. Letter D, neither condominium owners nor cooperative owners own individual units. Question number 5, which statement most accurately demonstrates the difference between condominium owners and cooperative owners? And the answer is letter B. Condominium owners own individual units, while cooperative owners do not own their units. They own shares in a corporation that owns the building. So basically, they're looking for what is the difference between a condominium and a cooperative. And this is very standard stuff that you typically see on lots and lots of practice examinations. You will see these under forms of real estate ownership, depending on where you took your class and sort of whom you took it with and the books and the materials that they supplied. But they're definitely, you want to make sure that you understand it. No, so on the national level, we want to make sure that we know the difference between the two. And here, in this case, it is the definition. So letter B is the closest to it. Now, there's variations, and that's where there's these subtleties. Like letter C is basically the opposite, right, of letter B. And then neither condominium owners nor cooperative owners own individual units. Well, that's not true. When you own a condo, you own your individual unit. And then letter A, condominium owners own their units plus a share of the common areas, while cooperative owners own only their individual units but have no ownership interest in the common area. So the first part of letter A is correct. That's the definition of what a condo is, but then they kind of botch the definition of a cooperative here. So just be careful. The most complete and correct answer is B. And if you actually just understand what B is, then it is the easiest definition of the difference between a co-op and a condo. So this is a good one that you will see potentially on exams. Question number 6. A contract in which both parties have fulfilled their obligation is considered to be letter A, pending. Letter B, executory. Letter C, fully executed. Letter D, voidable. Question number 6, a contract in which both parties have fulfilled their obligation is considered to be, and the answer is letter C, fully executed. These are simple. These are basic contract questions, basic fundamental contract questions. You want to know, what is executed? What is executory? Those are actual phrases: voidable, void, valid. You want to know all of those basic definitions. They will serve you well, trust me. And these are easy questions. So again, a contract in which both parties have fulfilled their obligations, this is textbook fully executed, which means all the parties have fully performed on all of their obligations in the transaction. And a fully executed contract, sometimes they'll say fully executed, or they can just say executed contract, which means fully completed. All right, so executory versus executed is really the what was at matter here, and that's a good simple one for contracts and fundamentals. Question number 7, the Sherman antitrust laws, which are designed to protect buyers and sellers from unfair competition and predatory business practices, prohibit competing brokers from letter A, group boycotting of other competing brokers. Letter B, price fixing of commission rates. Letter C, geographically dividing the market to decrease competition. Letter D, all of the above. Question number 7, the Sherman antitrust laws, which are designed to protect buyers and sellers from unfair competition and predatory business practices, prohibit competing brokers from, and the answer is letter D, all of the above. All right, so this question is actually really cool, and I want to sort of illuminate a couple things. Number one, sometimes you'll see this on exams, where they'll give you something, like they gave you the Sherman Antitrust Act, and then they explained what it was, which was sort of a give me. Now, you might see Sherman later, so this could be exceptionally helpful. This would make a great use case of clicking the mark function on an exam. Mark this one, and then you can come back to it. And it doesn't mean that you don't answer it, but you want to mark it as if you want to go, hey, that's the definition of Sherman antitrust. I should keep that handy in case I need to re-reference that. And that's what I would do. I would just mark and go, okay, that's something that I want to know. Now knowing that Sherman antitrust, all of these A, B, and C are all situations that would be applicable to violating the antitrust laws. And all of these are good examples of how the brokerage industry could be found in violation of Sherman Antitrust Act or local state antitrust laws. All right, so this is an excellent question. This is a basic what is antitrust question and how does it function, and a good useful one to keep handy as you're studying for your exams. Question number 8. Which of the following is not part of the bundle of rights of real estate ownership? Letter A, the right of exclusion. Letter B, the right of enjoyment. Letter C, the right of execution. Letter D, the right of disposition. Question number 8, which of the following is not part of the bundle of rights of real estate ownership? And the answer is letter C, the right of execution. All right, so these are straight. What are the bundle of rights? And there's many authors, depending on the book, there are going to be usually 5 or so of the bundle of rights. And with the bundle, the right of exclusion, the right of enjoyment, the right of disposition were all textbook rights, or the bundle of rights, also known as equitable title, by the way. If you take my class, you'll learn it in a couple of different ways. I would just memorize these. Now, something to just take note of, the first 3 all are with E, right? So exclusion, enjoyment, execution. Sometimes students are going to go, okay, these are all kind of similar. I bet you these are all the ones. And the right of disposition, which is the outlier, is probably the answer if they just didn't study this. So I would memorize what the bundle of legal rights are, the bundle of rights. You'll see them in your textbooks. You'll look them up, and then you'll just memorize them. There's usually 5, and execution is not. One of them, exclusion, enjoyment, and disposition, are. Question number 9. The act of a broker using the funds from a trust account for the purposes other than what they were originally intended for is called letter A, commingling. Letter B, domingling. Letter C, installment. Letter D, conversion. Question number 9. The act of a broker using the funds from a trust account for the purposes other than what they were originally intended for is called... And the answer is... Letter D, conversion. All right, look, I laughed because domingling is a very funny word to me, and I was like thinking about it as I was saying this, and I was like cracking up inside. I was laughing actually way more than I showed. All right, so domingling clearly is just some nonsensical BS answer. Commingling is a definite thing. Commingling is mixing our funds with client funds. That's a big no-no, right? And installment, really incorrect. So B and C are absolutely you throw out. And then the question is, well, what was commingling and what was conversion? I learned about those in my real estate class, you're thinking, and you're just looking to place a definition. So the act of a broker using the funds, using is the operative phrase here, using the funds versus mixing the funds from a trust account for the purposes other of what they were originally intended for is called conversion. So conversion is the use of funds. Question number 10. Which of the following involves offering an asset of value in exchange for a loan? Letter A, hypothecation. Letter B, due diligence. Letter C, proof of funds. Letter D, concession. Question number 10, which of the following involves offering an asset of value in exchange for a loan? And the answer is... Letter A, hypothecation. This is standard vocab phrase territory for us to want to memorize. What is hypothecation? You will find this in your finance section, your basic finance section inside of any of your books or materials that you guys are using. That's where you're going to find this, hypothecation. And this is a fairly decent definition of it. Which of the following involves? It's offering an asset of value in exchange for a loan. And that's what hypothecation is. Hipotecar means sort of what a mortgage is here, in the U.S. We call it a mortgage loan, and in other parts of the world they call it hipotecar, which basically means to hypothecate, which means to pledge a piece of property in exchange for a loan. So this is classic textbook. The other items here, due diligence, proof of funds, concession, all phrases, all vocab phrases, but they are not the definition of what number 10 is asking for. This is a pretty straight to the point type of question. Question number 11. Which of the following are addressed under the TRID, the TILA-RESPA Integrated Disclosure Rule? Letter A, written estimates of terms and costs of a mortgage loan must be provided to a consumer. Letter B, lenders are required to provide the consumer with a good faith estimate of credited closing costs within 3 business days of receiving a completed loan application. Closing disclosure replaces a previously used document known as a HUD-1 form. Letter D, all of the above. Question number 11, which of the following are addressed under the TRID rule, which is known as the TILA-RESPA Integrated Disclosure Rule? And the answer is... Letter D, all of the above. Okay, so TRID, the TILA-RESPA Integrated Disclosure Rule, is definitely something that you will see on examinations. Luckily for the brokerage community, it isn't as comprehensive as you might need to know it for other examinations. For example, let's say the mortgage loan originator's exam. You need to know a lot about this TRID rule. But for us in brokerage, TRID is just some of the basics. So when you're studying for this, anywhere you are, I would focus on the basics, like these in multiple choice format. This is a great explanation of understanding what TRID is. If you can kind of boil it down to this and just kind of know a little bit of the timing for the disclosures, you're probably sitting reasonably pretty when you're going to take this examination. Many authors overwrite this section, as a matter of fact. They go into a lot of detail, of which I don't really think you need to know, or at least limit your exposure to it. Get good at other things when you're playing the test-taking game, right? We're just trying to get through this examination to get you all licensed is my sort of goal here. So, but this one was a good question of understanding what TILA-RESPA is. A, B, and C are all true, and therefore D is the correct answer. Question number 12. Which of the following is not one of the 3 types of depreciation used in the cost approach? Letter A, economic obsolescence. Letter B, functional obsolescence. Letter C, proprietary deterioration. Letter D, physical deterioration. Question number 12, which of the following is not one of the three types of depreciation used in the cost approach? And the answer is letter C, proprietary deterioration. Sounded fancy, but it was not one of the three types of depreciation used in the cost approach. This, again, is straight up what is the cost approach to real estate valuation. You're going to find when you study your sections is that economic obsolescence, sometimes called external obsolescence, by the way, functional obsolescence, and physical deterioration is something. Now, remember that economic obsolescence, you might see this one is always incurable. Look up curable versus incurable in this section. Functional obsolescence and physical deterioration are both curable based off of the amount of money that's invested into it to remediate the problem. So you'll learn about this type. It's called the cost approach to valuation. And this is in the appraisal section of your textbooks. And proprietary deterioration sounded fancy, but it was clearly the incorrect choice. Good question. Question number 13. The most all-inclusive type of real estate ownership is letter A, defeasible fee simple estate. Letter B, fee simple absolute estate. Letter C, life estate. Letter D, non-freehold estate. Question number 13, the most all-inclusive type of real estate ownership is and the answer is letter B, fee simple absolute estate. Okay, so fee simple absolute is the highest recognized ownership interest, as a test question called it, the all-inclusive. I kept thinking about a resort, but the all-inclusive type of real estate ownership. So it's the highest form of ownership interest. These are in sections of your textbooks called interests in real property, forms of real estate ownership. It could be in one of those, real property and the law, potentially in those areas as well, depending on where you're taking this course, your courses and stuff like that. But fee simple absolute is the highest of the highest, all right, as far as the type of ownership that's absolute in the United States. Life estate has limitations. Defeasible fee estates have some kind of limitations. It could be deed restrictions and such. And then non-freehold estates, a non-freehold estate would be defined as things like a leasehold estate or an encumbrance category. And those are not the highest all-inclusive type of ownership. So the clear, classic, standout front runner is you want to know the definition of fee simple absolute. And that's the highest level of ownership here in the United States, the most all-inclusive. Question number 14. Which of the following is a way to terminate an appurtenant easement? Letter A, the owner of the dominant tenement purchases the servient parcel. Letter B, abandonment by the owner of the dominant estate. Letter C, when the purpose of the easement becomes unnecessary. Letter D, all of the above. Question number 14. Which of the following is a way to terminate an appurtenant easement? And the answer is letter D, all of the above. Okay, all three of these are ways to terminate an easement. Now, when you meet with me in my kind of coursework that I do, I always tell my students, memorize several ways that you can terminate easements. That's something that you definitely want to know. Appurtenant easements, we learn about dominant tenements, servient tenements, and dominant tenant, servient tenant. We learn all these different phrases and sort of how it works. We look at some illustrations. Books typically have those, right, wherever you take these courses. And you just want to know that these are three classic ways that we can terminate an easement appurtenant or an appurtenant easement, where the owner of the dominant tenement purchased the servient estate. We talk about a beachfront example. Abandonment by the owner of the dominant estate if they abandoned the easement, and when the purpose of the easement becomes unnecessary. Okay? All three of which are excellent, standard, classic ways to terminate appurtenant easements. So D, all of the above, is the answer. Question number 15. When an appraiser uses several techniques, including reviewing market data, analyzing cost, and utilizing the income approach to determine a property's value, they are using the process of letter A, tax assessing, letter B, reconciliation, letter C, comparable market analysis, letter D, loan to value. Question number 15. When an appraiser uses several techniques, including reviewing market data, analyzing cost, and utilizing income approach to determine a property's value, they are using the process of and the answer is letter B, reconciliation. This is, again, standard. What is the appraisal process? Reconciliation is a classic vocab phrase that you're definitely going to see utilized inside of examinations. Focus on the appraisal unit wherever you take this course, wherever you study, whatever materials you're using. Focus on the appraisal section. Many of the PSI examinations or Pearson examinations are going to have something like, potentially 10 to 12 appraisal-based questions. So it's only one unit, but it carries a lot of weight when it comes down to it because there's so many variants that you can ask with such a small amount of content with questions. And reconciliation is absolutely something that you want to know the vocab phrase too. You want to know what a comparable market analysis is. Loan to value has nothing to do with the appraising component here, so I would have thrown that out just by looking at it. Tax assessing, as you're beginning to establish, tax assessing and valuation, ad valorem taxes, and actual market value understandings with appraising are two different things, okay? So we can kick it out, but it could have been a sort of a contender, but reconciliation to me was a standout. And you want to know the vocab phrase reconciliation. Question number 16. A defining characteristic of the metes and bounds legal description is that letter A, begins and ends at the same point. Letter B, monuments cannot be used as a reference point. Letter C, it includes the township and section numbers. Letter D, all of the above. Question number 16, a defining characteristic of the metes and bounds legal description is that it and the answer is letter A, it begins and ends at the same point. So the metes and bounds description has a point of beginning, and the point of beginning ends where we started. So the point of beginning equals the point of end in the metes and bounds description. What they did here is they kind of gave you this mashup. The beginning and end same points is the correct answer. Monuments is a vocab phrase that we actually use in metes and bounds description. However, the cannot be used as reference points, not true. You can use them as reference points. The older legal descriptions have had those as reference points. So B would just be incorrect. C, it includes the township and section numbers. That is the government survey. So in your learning, you would have learned about three types of legal descriptions. We have the metes and bounds description, we have the lots and blocks description, and we have something called the rectangular or government survey. Those are the three legal descriptions that you learn about in real estate courses. And you want to know a little bit about each one of those. However, letter C, it includes the township and section numbers. That is the government survey, not the metes and bounds. So therefore, D, all of the above would not be correct. The only answer, if you wanted to reverse engineer looking for the correct answer, would be letter A for the metes and bounds legal description. It begins and ends at the same point. Question number 17. No two parcels of land are identical. This uniqueness means that real estate is letter A, non-homogeneous. Letter B, invaluable. Letter C, scarce. Letter D, homogeneous. Question number 17. No two parcels of land are identical. This uniqueness means that real estate is and the answer is letter A, non-homogeneous. Okay, so sometimes they use phrases that are different. So non-homogeneity, non-homogeneous means that it is unique. It's the same as saying something is unique. Homogeneous is the opposite, which means there are many of the same thing. Invaluable, not not even a front runner whatsoever. I will kind of point out there is a word scarcity here. Now, in most real estate texts, you're going to learn about the physical characteristics of land and the economic characteristics of land. And the physical characteristics, no two parcels are identical, refers to a physical characteristic called uniqueness. Okay, uniqueness. They actually use it here. But scarcity is an actual economic characteristic of land, and the fact that we aren't producing any more land, therefore land is relatively scarce, and because it's relatively scarce and majority of the planet is filled with water, its scarcity contributes to its economic characteristics or advantages. However, they were looking for this uniqueness. The uniqueness idea here, the operative phrase was that. And then therefore all day I would have picked A. You just want to know that sometimes it's unique, sometimes it's non-homogeneity, and sometimes it's non-homogeneous. And these are the different variants that you can use for the word unique. Question number 18. An involuntary lien that has been filed to give constructive notice and is attached to a property may be A. Letter A, primary mortgage. Letter B, HELOC. Letter C, second mortgage. Letter D, judgment lien. Question number 18. An involuntary lien that has been filed to give constructive notice and is attached to a property may be A. And the answer is letter D, judgment lien. So a judgment is a court decree, and we can create a judgment lien from this court decree. And the other three are all voluntary. So the real trick here is the phrase involuntary lien. So the question I would ask myself is, well, what are voluntary liens? Mortgages are voluntary liens. All three of which these are variations of mortgage types. HELOC stands for Home Equity Line of Credit. Primary mortgage, and then a second mortgage. These are all done voluntarily, okay, by the consumer's actions. A judgment lien is not by the consumer's actions. That's done involuntarily. So you want to know the difference between a voluntary lien and an involuntary lien. And a judgment lien is a classic type of involuntary lien. It means I didn't want it on there, but I did something, I hurt someone, and they placed this thing on there. Question number 19. What is the primary goal of Fannie Mae and Freddie Mac? Letter A, to provide insurance for mortgages backed by the government. Letter B, to provide liquidity and stability to the mortgage market. Letter C, to keep home loans out of the secondary mortgage market. Letter D, none of the above. Question number 19, what is the primary goal of Fannie Mae and Freddie Mac? And the answer is letter B, to provide liquidity and stability to the mortgage market. So we want to know what is Fannie, what is Freddie. Get a basic understanding. And again, to provide liquidity to the mortgage and stability to the mortgage market is a good a sort of one sentence sort of value proposition of what they do, right? I think that that's a fair one. But you want to know that, and you also want to know that it doesn't provide mortgage insurance to back securities. The FHA provides insurance, and you'll learn about those, to keep home loans out of the secondary market. Fannie and Freddie are the secondary market, basically. They're the two largest, Fannie being the biggest, secondary market players on the planet of Earth. So in terms of that, letter C is 100% incorrect. And then letter D, none of the above is not true. To provide insurance, that's the FHA, and the only possible answer that I would have sort of limited it down to was to provide liquidity and stability to the mortgage market. Question number 20. Which type of real estate professional is most likely to rely exclusively on the comparative market analysis approach to property valuation? Letter A, a real estate broker. Letter B, a tax assessor. Letter C, a licensed appraiser. Letter D, a land surveyor. Question number 20, which type of real estate professional is most likely to rely exclusively on the comparative market analysis approach to property valuation? And the answer is letter A, a real estate broker. Okay, so we first want to know what is the difference between a comparative and a competitive market analysis. Depending on the jurisdiction, depending on the book, depending on the instructor that you learn this from, they will sometimes call this a competitive market analysis, or they'll call it a comparative market analysis. So competitive versus comparative. They're one and the same, potato, potato. Some like to look at it like your home is competing against another home, and some like to say, how is your home more competitive with the marketplace kind of thing, right? So it's the same idea. All of it boils down to an opinion of value rendered by a non-licensed appraiser. So the real estate broker and the real estate salesperson will utilize their opinion of value in a document or sort of a presentation called the competitive or comparative market analysis. And a licensed appraiser would just simply call their valuation opinion an appraisal of the property, right? So that's the difference. You can't call it an appraiser or an appraisal, but you can certainly refer to your opinion of value in the real estate brokerage side of the business as a CMA. Okay, so you want to know that the tax assessor is doing an assessment, the licensed real estate appraiser is doing an appraisal, and the land surveyor is just doing a survey. So who would typically use the comparative market analysis in this question? The answer is a real estate broker. You definitely want to know some of the items here in the appraisal sections of your textbook, one of which I would know the basic definition of what a comparative market analysis is. Okay, that was 20 more questions, and I hope you found these 20 questions useful and helpful. Again, really pay attention to some of the fine points of these questions and study those topics that I reinforced during our review of these. I hope they serve you well, and I hope they lead you to passing this section of the exam. Please, respond to us in the chat. If you know someone that can benefit from this, please share this, like and subscribe if you can, because we're always putting out new materials in all kinds of different variants when it comes down to getting your real estate license and some of the foundations and the fundamentals of business and the foundations and fundamentals of real estate property, generally speaking. So it was a pleasure to be with you during this segment. I look forward to doing more like this in the future, and we'll see you very soon. Good luck on your exams.